How we doing, traders? Welcome to Stock Market Movers. I'm your host, Money Mitch. Excited to get into today's action. A lot going on. Will the rally last? We'll talk a little bit about that. Topics: what happened in GDP? Are we technically in a recession? Will the jobs market tank? And of course, we're seeing some action out there. Why solar stocks are soaring. Energy earning stocks we got to get into. We got a lot to talk about. I think I got like 10 earning stocks to flow through. We're going to try to get it all in. And of course, we got some great interviews. Like always, that's what Stock Market Movers is all about. It's trying to keep you guys in the informational edge. Two expert interviews today. We got JoAnne Feeney, portfolio manager and partner at Advisor Capital Management. We got Chris DeMuth, hedge fund manager at Rangeley Capital. So excited to dive into today's show. Welcome to it. Give me a thumbs on up if you guys are excited. Let's dive in and welcome to Stock Market Movers with Money Mitch.
It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now, we all know the bull market is here to stay. Money Mitch.
How we doing, traders on out there? How's the market treating you? It's not looking too bad. Definitely getting a nice rise after that 10 a.m. hour. We can take a look here. Look at that push there in the SPY. Let's take a look real quick at the overall market. Let me take away some of these indicators so you don't get distracted here. All right, you guys are seeing the SPY pushing. We're trying to hold up there towards the 404.50s. We'll see if it's able to close. I've been talking about a close above 401.50s will definitely keep me in that bullish realm. We've been holding on up. We filled in that gap zone. Now we're trying to actually get up and about that gap zone. We'll see if we get on over there and actually close above it. Been watching the SPY here. But of course, everything was watching on economic data this morning. Let's talk a little bit about that. So what happened in GDP, right? I mean, it was on a lot of people's radar. So here you guys have the numbers. I'll scroll them here on the bottom, and we'll take a look at what really showed up here. So where did the decline come from, right? And I think it's important to kind of watch. Let's take a look here. It really came in the decreases in inventory, residential, non-residential investment, and government spending at the federal, state, and local level. Gross private domestic investment tumbled 13.5% for the 3-month period, and consumer spending, as they measured through personal consumption expansion, increased just 1%. Spending on services increased 4.1%, but we got declines in non-durable goods of 5.5%. So that definitely offset it there. Durable goods declined of 2.6%. So definitely, even with that increase in the spending on services, we got those declines in the non-durable goods and durable goods to get us definitely on the downside. Of course, the expectations were set at 0.5. We actually came in negative 0.9 here. And then the prior was negative 1.6%. So it was a little bit better than that. At least it didn't beat that, but definitely what we were looking for. And we had Sam Stovall on here yesterday, and he was talking about potentially maybe seeing a 1%. We saw negative close towards that 1%. So something definitely that hit the market. But like always, GDP is a little bit lagging on that. But of course, what are you hearing a lot about today, right? You're hearing a lot of talk of, are we in a technical recession, right? Are we technically in a recession? Well, it really all comes down to the National Bureau of Economic Research. As what they do is they define recession as a significant decline in economic activity that spreads across the economy that lasts for more than a few months. But there's a couple of variables that they track, right? It's not just one. The variables that the committee typically tracks include real personal income minus government transfers, employment, and various forms of real consumer spending and industrial production. One of the things is they're the official scorekeeper and will let us know if we are in that recession. But yes, technically, 2 straight quarters of negative GDP is the old standard, if you want to kind of call it that. But It all comes down here to the NBER. We'll see what happens there. It looks like it didn't really affect the market much because we were still kind of moving on up. Now, one thing to state, of course, is GDP is lagging, right? So what I would say is what's on watch for tomorrow. Keep this on watch, guys. We're going to be looking at we'll be watching the core PCE, and that's the important number, of course, that the Fed watch. I would keep watch month over month estimates at 0.5. Prior was 0.3. So keep on watch. This is going to give us at least a look into inflation. So I'll be watching this. I know the Fed will be watching also. Another thing that happened, we got initial jobless claims coming in at 256. So the question here is, of course, will the job market tank? You saw mentions that the job market was strong. You saw mentions yesterday, Jerome Powell saying that, yes, they expect to see a little bit of lift in that unemployment. Now, of course, will it just start going through the roof? I think that's something that we need to all keep an eye out because, yes, that will be kind of more of the guarantee. Yes, this is a recession if the job market starts to weaken. We'll see if they're able to accomplish that soft landing that gets talked about and thrown about. But it is interesting to watch how we're reacting here. Just to kind of state on the Fed here, back-to-back 75 basis point hikes in June and July marked the most aggressive 2-month hikes since the Fed overnight rates took over the primary kind of tool in early 1990s. Let's get out of the overall market, something that we're going to keep on watch. But let's get into, of course, my favorite segment, which is what was hot and what was not. Let's take a look here. All right, so we see here what led from the open. So what led from the open was actually real estate. Didn't expect to see this actually taking lead here. Let me know, guys, if I'm starting to kind of filter out here. I see my internet dropping a little bit, but I should be able to get through here. I'll close down some windows, make sure that we should be fine. Real estate, residential industries that led there. So you guys can watch there. Let's take a look at some of these higher cap ones. EQR definitely getting some lift, but it was a lot of real estate. It wasn't in just one area. You could take a look at even industrials, and you could see PLD getting a nice lift. The question is, will these continue to run? I'm going to keep on watch. I've been watching ITB, and that doesn't seem like it wants to turn around. That's the home construction index. And you could see it's strong, and it's showing something different than what we're getting in the numbers, right? Because at least from what I've been hearing in real estate is negative downturns, right? Pending home sales were down. At least the charts aren't showing that. So something definitely to keep a watch on to see how this kind of continues to perform or not. Let's keep going. What other stocks were hot today? Well, you'll see utilities continuing to be hot. You can see here it's been now kind of like a 4-day trend, making some lift. What are some of these names? I'm not going to lie. I've been missing some of this move, and that's NEE, Nextera Energy. Look at that little lift today. Nice little candle, up about 5.1% there. You could also take a look at some other players, right, in energy, like Duke. Duke getting a nice little lift up there towards the 108.50s. We'll see if it's able to close back above the 110s where it cracked down before. SO, you saw Southern Company getting some lift today. You can take a look at Dominion Energy. And another one that I look at all the time is Excel Energy. They're doing pretty well. And it's interesting, raising rates usually mean a tougher time for utilities, but seeing them rise today. All right, another area that I like to look at is regulated gas. We've been talking about this one since yesterday, CNP. Keeping an eye out on these because, of course, we saw that recent run in natural gas. Look at CNP getting that nice lift, and this is also, of course, into the utilities. Keep these on your radar. ATO, look at that move from the 113s up there towards the 118s, and you could say from the 111s, 50s up there. That's about a 5.7% move. And a good-looking chart there in Atmos Energy, utilities and regulated gas. Something to keep on watch as we've seen, of course, more and more talks of natural gas. I did see UNG kind of top on out, pull back today. We'll see if it's able to come back and take out those highs, as you did get kind of that double top area in the 3150s. All right, so what was not hot today? I mean, we could take a look also at industrials. rental and leasings were doing well, so keep those on your radar. But let's take a look at energy. Energy wasn't hot, but it also is coming back here. And the reason that I can take a look at that is if you take a look at where we started on the day and we pulled back down, then coming on back, we're still in the red a little bit from the open. But let's take a look at some of these names like ExxonMobil. ExxonMobil got up there towards 92.75. I played it today for the reversal from the bottom down there towards from around the 91.18s up there towards the 92s, selling some out at 92.50. It wasn't a bad move, but I'm kind of concerned. Of course, we're having earnings that will be really hitting this. It looked good here today with Valero's energy report, but look how this actually traded in the open. I'll talk about the earnings on this stock a little bit later today, but definitely a turnaround there in some of the energy names. So I'm going to keep on watch. Of course, if we know our earnings report is going to be coming and hitting, so we got to keep this on our radar. If we take a look here, of course, what hits on Friday before the open, you got ExxonMobil, you got Chevron, you got Phillips 66. So this is definitely going to be something that we'll be watching tomorrow as these energy names get their earnings on out. So let's get out of what was hot and what was not. Let's get into why the solar stocks are soaring. So of course, solar stocks are on up. I played some of these today. Don't know if you guys caught this, but let's go ahead. Let's talk a little bit about this and take a look how it's trading today. So this is the industry index for me, and you can see here how we ripped right out the gates here. Pulled on back now. We're going a little bit sideways. So I'll go ahead and I'll point to kind of the leader that I've been watching, which is Enphase. We were watching to see if it was going to get up into this area as we've been seeing it kind of before the earnings leaning up to that breakout above the 220s, and it broke out really nice here. We were watching this one since yesterday. We drew this circle. Could it get up there towards the highs of the 270, 280? And it did push on up there. But why are they moving? Well, of course, this is on West Virginia Senator Joe Manchin announcing an agreement with Senate Majority Chuck Schumer on the legislation of health care costs, climate change. This bill including $430 billion in new spending in energy. And it wasn't only affecting solar stocks. I mean, you guys can watch some of these moves today. There were definitely big moves on up. I was watching SPWR for some seasonality effect this last couple of days, and it's really ripped. So keep these on your radar. We'll see if they kind of get into more of a buy the rumor, sell the news kind of thing, but definitely a good day for solar as it's the leading industry in technology. This was affecting other stocks also. I saw ChargePoint up on this. Of course, is the charging station. So keep these on your radar. We'll see if these can continue to run, if there's maybe some more mentions of this bill. But it wasn't a bad day there for a couple of solar stocks and some ESG outlooks. All right, let's get out of solar stocks. Let's go into our first interview today. We're going to get out of ChargePoint here. We'll play a little trailer, and then we'll dive into our first interview today. Excited to talk. We'll talk a little bit about what is going on in this rally. Do we see a bottom? We'll take a look at also some opportunities that you guys can be looking out for coming on up.
Introducing Portfolio Synchronization with your brokerage. Now you can securely connect your brokerage account to Benzinga Pro, opening a world of personalization. Screen lightning fast news just for the stocks you own. Set alerts for news catalysts that affect only the companies you care about. It's all possible with a simple click and a secure protected connection. Overcome uncertainty and connect your portfolio to Benzinga Pro today.
All right, traders, please give a warm welcome here as we bring on JoAnne Feeney, portfolio manager and partner at Advisors Capital Management. Let's dive right in. First thing I want to ask is, we're getting this rally, and I'm sure that the question has been asked before, but is the bottom in now?
Well, Mitch, who the heck knows? This is a volatile market, and it's likely to stay volatile because there's going to be a lot of important news that comes over the rest of the year. Even the Fed acknowledged that when they changed their perspective a little bit and said, we're not going to give such specific forward guidance anymore. And the reason for that is because between now and their next meeting, We're going to get 2 more CPI prints. We're going to get more GDP information. We're going to get more labor market information. And while there's an awful lot of talk this week about whether we're in a recession, as you, I think, very clearly laid out, a recession isn't technically 2 negative GDP growth periods. It's a lot more than that. It's about the level and breadth of economic activity. And we are clearly seeing a slowdown. The market has been anticipating that. And I think there's a little bit of a relief rally that's taken place over the last couple of days. But, investors need to look beyond 6 months. They need to look out a year, 2, 3 years. They need to really be investing here for the longer term and be able to ride out this volatility.
Perfect. Now, one of the things that I want to look at are what are some resilient stocks or industries that we should be watching out in this market environment?
For our investors, and they're a mix of folks. We've got younger folks who are growth investors. They have that really long-term horizon. We've got retired folks and some in between. So if we look at the more aggressive investors, right, the ones that are prepared to wait for things to work, one thing we want to think about right now is which parts of the economy are resilient to recession. Which areas of the real world out there are going to continue to grow, even if the economy does enter a formal, well-defined recession? And one area we really like and have liked for a while is the area related to cloud computing and internet traffic flow, and all of the infrastructure from chips to servers to software that enables that whole world. And so a company like Broadcom, for example, we've owned it for our clients since 2015. It's done very well. It also has a nice dividend, which helps people ride out some of that volatility. Another one, which is down today, at least last time I looked which was Qualcomm. They're enabling not just smartphones, which, are admittedly are in a little bit of a weak spot right now, but ultimately they also have exposure to autos, to industrial, and to cloud data centers. And so that's an opportunity, given the decline, to add some Qualcomm to a portfolio.
Definitely one area that I've been watching, and you hear mentions of it all the time in earnings report now. It's all about the cloud, right? What are they doing with the cloud? We saw how that affected Microsoft and Google's earnings, so something to keep on watch. Let's keep it going here. Let's talk a little bit about some longer term plays, right? If we have a bigger horizon, what are some themes that you're watching for? I know that we're looking at some tech names right here, but maybe have you taken a look at, do you like the EV space? I know that we got some solar news today. So we saw stocks like ChargePoint moving on up, charging stations. What are some themes out there?
Yeah, that's another good theme. It's a little bit tough to find good value in that space. And it's obviously they're very reactive to news like that, which is out today on the infrastructure bill. But, there are other ways to play that are a little bit more appealing from a value perspective. A company in the industrial space like Timken, which provides parts that enable EVs and the infrastructure surrounding clean energy. Or you can go into the semiconductor space and look at a company like Texas Instruments, or NVIDIA, for example. I mean, these are all companies that are enabling the move to more automation, more clean energy, more electric vehicles. So there are ways to play this that don't require you pay up for the most popular firms that are out there, whose stocks tend to be a lot more volatile and reactive.
Definitely some that I'll be watching is some autonomous plays. We'll see what happened with those. But I think at the end of the day, if we could get autonomous right, the consumer is definitely going to be, probably begging for an EV. I don't know about you, JoAnne, but I would take some auto drive if it's safe at least.
Right.
All right, let's keep going. Let's take a look at, when you're looking at stocks and you're looking at the fundamentals, what areas should investors always look at and maybe compare to find some value?
Yeah, that's a big question because there are a lot of things to look at. Now, what we often hear quoted, on all sorts of shows from CNBC to Bloomberg to Benzinga to Yahoo Finance, right, is the PE, the forward price to earnings ratio. That's one measure of valuation, but there are a lot others that get you more into the depths of what the companies actually do and what they can do. It's really important to look at the structural earnings power of a company. Look at the cash flow they're generating. And there's an awful lot of noise in the earnings figure. So that's why you want to look a little bit deeper, maybe EBITDA, look at the enterprise value to that figure, because it gives you a better sense of what the company can actually produce. Another thing that we like to do for clients, especially in times of volatility and this potential risk of ending up in a recession for a little while, is look at the company's balance sheet. You want to understand, are they vulnerable if credit markets freeze up a little bit? How much debt do they have? And when particularly is that debt maturing? How much cash flow are they generating? If they're paying dividends, do they have a cushion so that they can continue to pay dividends even if revenues drop, say, 20%, right? These are ways you can protect the portfolio from too much volatility. And that other group of investors I was mentioning, the more conservative ones, the ones that are looking for income off their portfolios, like through dividends, for those sorts of investors, you really want to do a deep dive on the balance sheet and the cash flow statement to make sure that the companies are resilient to a slowdown.
All right. Now, the last one I want to talk to is, of course, we have Amazon's report coming in after the bell. Is there something that you're going to be watching in Amazon report that maybe we should be watching? And of course, how do you feel about the consumer in the e-commerce space?
Yeah, Mitch, clearly the consumer is slowing down a little bit, right? And it's not uniform. The high inflation, the high cost of energy and food is clearly crimping the budgets of some consumers more than others. Those who tend to spend a higher proportion of their monthly budget on those two are really feeling the pinch. And they're the ones that are cutting back on the spending they're doing over at Walmart and other places. And so when we look at Amazon, obviously the retail side of the business has been getting a lot of headlines lately and how that's slowing down. We saw them report that last quarter. So I think a lot of that's already in expectations that we're going to see a further slowdown there. Really what you want to watch for Amazon is what kind of growth can they generate over the next 2, 3, 4, 5 years. And that is largely going to come from, again, the cloud side of the business. Amazon Web Services is a cloud provider globally. They're the leader. They generate a lot of profits on that side of the business, and they can do more. So we want to see how well that's holding up, how much growth they're going to see there, and what their expansion plans are like.
Something that I'll be watching, of course, that AWS. What do we get from there? We saw it really kind of push Microsoft and Google. We could potentially maybe see a miss, but some good cloud numbers and still see Amazon up, something that I'll keep watch. Thank you for joining me today, JoAnne. We'll definitely have you back on, especially after this earnings season can calm down a little bit.
You bet. Take care, Mitch.
Thank you. All right, there you guys have it. First interview there. We talked about the bottom. We talked a little bit about some resiliency, some opportunities in the long run, and of course, a deeper dive. If you want to start learning some more fundamentals, I definitely tell you guys to start learning, start digging into how you really dive into these reports to find some value. Let's keep it going here. Let's talk about the earnings stocks. We got a lot to go through, so I'm going to start trying to dive through some of these. Of course, I'm going to keep it quick. If there's a stock you guys want to talk about and do a little bit more deeper look, throw it up in the chat, and I'll definitely catch it. Now, let's go ahead. Let's keep going through these earnings report. First one up, of course, is Meta. How's Meta trading today? Let's take a look at the 15-minute, see how we're trading. You can see we're down actually from the open, trying to come back though. Even if Meta can't come back in this kind of tape where you're having like a nice breakout to the upside, I don't think it's going to come back, but we'll see what happens. Let's get into these earnings. Okay, so Meta Q2 EPS missing here at $2.46, missing the $2.61 estimate. Sales missing also here at 28.82 billion, missing the 28.97 billion estimate here. Daily active users were right about the expectation, and so were the monthly active users. Let's go to QCOM and keep the party moving along as we got a lot to go through. I'm going to try to do my best to get through all these. QCOM, we got a beat and a beat. Yes, I said it. There's not many times that we've been seeing this, but Q3 EPS coming in at $2.96, beating the $2.87 estimate. Sales coming in at 10.93 billion, beating the 10.87 billion. QCOM now sees Q4 sales at 11 billion on the low end, 11.8 billion on the high end versus the 11.87 billion estimate. All right, we'll continue to watch to see if QCOM can recover. It had a nice little quick bounce. We'll see if it's able to hold the VWAP and get back into some of these numbers. As you can see, there's not too many semis that are down today, but QCOM taking a hit. All right, let's go to one that I was wanting to watch. I talked about it on at the close. Honeywell, what would happen here? It looks like it's continued the ride on up even after the earnings have come out. Let's take a look at those. So Honeywell International here, Q2 EPS at $2.10, beating the $2.03 estimate. Sales were at $8.95 billion, beating the $8.69 billion estimate. Honeywell did raise their lower end of their full year 22 EPS guidance from $8.50 on the low end to $8.80 on the high end to $8.55 on the low end to $8.80 on the high end. So wasn't too much there. They did lower high end of full year sales guidance from $35.5 billion to $35.5 billion on the low end. They did raise it on the high end. They brought it down a little bit from the $36.4 billion estimate to $36.1, but it's just off a little bit. But as you guys can see, they're still liking this Honeywell report. Honeywell for ACs in this warming world, not surprised. Yeah, it's something to keep on watch. I definitely think this is a stock that has an opportunity, has pulled back far enough to see it come back there. It had a really nice little V bottom shape here. We'll see if it's continued to make the run. All right, let's get out of Honeywell. Let's start talking about the next one up, which is Pfizer's report. Let's get into Pfizer. Pfizer was trying to come back here. It was looking strong. You can see it the last couple of days going into the earnings. Look at the drop right out the gates, and then it recovers all that loss. This is where it gets a little bit trappy. Just be careful out there. EPS coming in at $2.04, beating the $1.80 estimate. Sales at $27.7 billion, beating the $25.98 billion estimate on Pfizer. Pfizer did lower end of full year 2022 adjusted EPS guidance by 5 cents to $6.30 on the low side, $6.45 on the high side versus the $6.62 estimate. They reaffirmed revenue guidance. So we'll see what happens with Pfizer definitely coming on back on the day. Drug manufacturer, and it shook out some people, I'm sure, on that drop. That was a pretty hard drop right out the gates to then recover. All right, there's T-Doc. Let's get into that. What's going on, chat? I see you guys out there. Thotty by nature, Aaron, Beach Bum. What's up, Risk It for Biscuit? You guys talking about a little Mara action? We can cover that in a little bit. Let's keep going through these earnings. Let's go to T-Doc. Teladoc here coming down there on the earnings, but coming back a little bit on the intraday. Let's talk a little bit about their earnings here. They came in at a loss here. EPS at $19.22, down from 86-cent loss year over year. Sales were at $592.37 million and beating the $583.76 billion estimate, but the EPS really missing, and that's why it dropped fast like a rock there. T-Doc, we'll see if it's able to come back here. Take a look at the daily candle on this. This has come all the way back and further down than where it came from in 2019. It's back in the 2018 numbers. So T-Doc, wow, after a big push to 300, now down by 35. We're down about 86% from the highs. Let's continue going. Let's go to Etsy here. And I know that some people were probably expecting some downside action after the Shopify report in Etsy, but that's not what we got here. Let's take a look. Etsy Q2 EPS at 51 cents, beating the 34-cent estimate. Etsy, that's what we want to see. Sales at $585.1 million, beating the $557.25 million estimate. Etsy getting on up there in the pre-market. Now just sideways. We'll see if it can get back towards that 113 that it tried to take out on the pop. Let's go to Forward, baby. Forward. Who's a Forward fan in the chat? Let me know. You GM fans or Ford fans? I did see some chatter in the chat asking about, well, what's up with the EV credits? Well, I'll tell you right now. So Tesla and GM are the two that don't have those EV credits. That is something to keep an eye out, right? Because the EV credits are the reason why I feel I like Ford over GM, because they have that credit still available to them. Of course, I think that these credits could get boosted up and maybe you can get more credits eventually. But for right now, I think it points more towards Ford, at least for me, than GM. All right, let's take a look there at Ford. It is on up in the pre-market, then dropped right out the gates there, but trying to recover that opening price up there. Looks like the opening tick there, we got about 14. Let's see if we can get back above there. You can see how right now you're trying to get above that 14, fighting it. Let's see if it can close above 14 today. Definitely, it's going to be something to watch forward if they can continue doing good beats on their earnings. GM, remember, it gave that bad news, but look at this. Look how it bounced off of that Ford news, pushing well there. All right, let's get out of Ford. Let's go towards the next earnings here. I'm going to keep it going. We've covered a lot here. We've already gone through 1, 2, 3, 4, 5, 6 earnings. We still got about 3 or 4 left here. Let's see what we can get. All right, Thermo Fisher, TMO. Let's go. Thermo Fisher, look at that move. Pre-market bounced up there towards the 610. Pulled on back there, gave all the gains pretty much up, and then bounced hard there after that push. Thermo Fisher EPS coming in here at a $5.51, beating the $4.99 estimate. Sales at $10.97 billion, beating the $9.97 billion estimate. Definitely one to watch, as we were seeing this earlier in the week, really pushing. And what was this pushing with? Well, let's take a look here. This was, of course, in diagnostics and research, our leading industry in healthcare today. And the other one that I pointed out was DHR. Look how this reacted. This is why relationships are so important, guys. If you would have known the relationship with TMO and DHR, you could have been watching today after their good earnings that we talked about earlier in the week, how this was one to watch with it. Look at that run there in DHR. Nice little 3% day, up about 2.8. Thermo Fisher up about 3.04. We'll see if these can continue to run. Diagnostics and research stocks not looking bad. All right, what's up out there in the chat? Put a thumbs on up. What's up? The new bill will add GM back into the mix, cutting Tesla out because they're over the 55,000. Well, that's good news, Crassi, and I think it's something to definitely keep watch. I need to look into more particulars into the bill, but that'd be good news for GM. And it's something that I called out weeks ago that I thought they were going to ask to try to get some more credits. As remember, they had a meeting where they went to the Biden administration. So there you guys see it. Push there for EVs and a push there for credits. That's definitely going to help. All right, let's get out of here, out of Thermo Fisher. Let's go to Comcast. Yes, I said it, guys. I sometimes mess around and I say let's short Comcast, but let's what is it again? I always mess up this ticker. I don't know why. It's CMCSA. I don't know why I always mess that one up. But let's go ahead. Let's take a look there. Comcast Corp breaking down here and not being able to hold here. Look at that downturn. That downturn is ugly. Adjusted EPS coming in here at $1.01, beating the 92-cent estimate. Sales at 30.02, beating the 29.7 billion estimate. But this is where it really hurt them, is their broadband subscribers fell flat. The 32.2 million for the quarter. This marks the first time ever that Comcast doesn't gain broadband subscribers. Another thing that pointed to the downside was Peacock, right? Peacock paid subscribers remained flat at 13 million after adding 4 million last quarter. So it doesn't look like the streaming services are taking off by any means. And so if you saw maybe Netflix get hit a little bit today, it might have been an outlook on that. Disney, maybe. Let's see how Disney's actually up today. It doesn't look bad. It's holding the 100 pullback pretty well there. And just for kind of giggles here, let's take a look at Warner Brothers up also on this, but Comcast getting hit hard. We'll see what happens there. Of course, broadband subscribers flat, Peacock flat, not being able to gain there. So definitely kind of hurt the stock there. Let's go to Southwest Airlines. Let's go take a look there right quick. Let's take a look there. And so one thing that we're kind of keep watch is what's going on in the airlines. Of course, look at that downturn today. It got hit hard off of that number. It was actually popping for a second there, and then bam, got hit to the downside there. EPS coming in at $1.30, beating the $1.18 estimate. Sales at $6.73 billion, beating the $6.71 billion estimates. Southwest did say that we expect to be solidly profitable for the remaining 2 quarters of this year and for the full year of 2022. Of course, but what other news did we get in the airlines? We did get airline news of course, JetBlue and that saga coming to an end. You guys are seeing JetBlue. Let's take a look how it's reacting out the gates there. It pulled back there. That might be why you're seeing a lot of these airlines down as they went and finally got the Spirit Airlines. Let's go to Save. Take a look at Save. How is that performing? It's actually coming on up now after that spike there in the pre-market. We'll see if it can continue on up. ULCC, of course, Frontier, actually rising on this. This is what I wanted to kind of see. Was this going to actually give them a raise going into, of course, their earnings? They're going to be reporting earnings, so keep this on watch. We'll see what happens in Frontier. All right, let's continue going. Let's see what happens in Frontier. The saga finally coming to an end. JetBlue getting this, and I don't know. Was this going to be beneficial to us? Did we want to see an ultimate discount carrier, with Spirit and Frontier? I'm not sure, but it's something to keep on watch. And another thing to keep on watch is what JetBlue does with that Spirit Airlines. They were talking about revamping these planes. Will that cause the price to come up, or will maybe JetBlue put out a kind of cheaper, economical price? We'll see what happens there. I wouldn't expect too much, but like always, at least Save disappearing. You don't have to fly Spirit Airlines anymore. At least in the long run, they'll start going away. I know that some people struggled with Spirit. I was one of those also. All right, let's go ahead. We'll get out of these earnings talk. We're going to go into our next interview just coming on up in about a minute or two. Just want to take a quick spy. You get what I mean? Spy on the spy here. Let's see what happened. What's going on in the market? Now we're up to 405, almost 406. This is just pushing up, not wanting to hold down there, relentless to the upside as we're definitely pushing on up past that. Now it's really coming into question. Can we come into this zone here? I've been looking to see if we were going to come up into this zone. Now we're definitely getting into it now, 405, 406. This is where I was looking to see potentially a turnaround. We'll see if we get back up towards the 410s. And then the next level from there, 416s. But definitely a strong day there. Q's also coming off the bottom there and really getting back there towards the high. Anything above 315, it's going to start really looking good there for the Q's. We'll see what happens there. And just to kind of mention the SPY, let's take a look really quickly at some components. Some of the big boys, Apple pushing back there, trying to get back to that 160. If it can hold that 160, we are right back in it for Apple. Microsoft up 2.94%, holding that chart that was looking bad earlier in the week. Now looking good as it's holding the 266 area, getting back up there to 276. Not a bad week there for Microsoft. Definitely a good hold there in the pre-market. It held down for a second there, went down there, and wasn't able to even crack the 267s for a while there, pushing up there to 277. Really strong day there. Tesla continuing the trend back up, right? We've been looking at that one since it pushed on up through the 740. Now up there to 840s. We'll see if it gets to the next level up to 875 is what I'll be watching on Tesla. All right, let's get out of these charts. Let's go ahead and play a trailer and dive into our next interview here. Smash the like if you guys are enjoying today's show. I tried to keep the pace on up and continue moving through this. Yellen is yelling. Oh, man. Well, we don't want to change up this market, but we'll see what happens here. Let's dive on in, play a little trailer, and get into our next interview here.
I tell all my CEOs, this is a very, very, very important platform. And look, all the other platforms are important too, but you're up there now. You're way up there.
Best investments you can do in your future is actually go and re-educate yourself on credible sites and credible resources like Benzinga. I think you guys have been killing it.
The comments section on this show is remarkable. Like the quality of the combo, and just big shout out to you and your community.
So I love about you guys, you just had all your callers in right then. And it's all about the community here at Benzinga.
All right, let's go ahead. Let's bring on Chris DeMuth here, hedge fund manager at Rangeley Capital. How are we doing today, sir?
Pretty good. How are you?
Hey, ready to dive into this market and talk a little bit about MMA, right? We just got the saga to finally come to an end, and I'm calling it a saga because there was a lot of those shareholder votes between Spirit Airline, Frontier, and JetBlue. What do you see moving forward in the airline industry now that this deal's done?
Not done yet. I think that the shareholders made the right call. I was surprised how tenacious the management was in holding on to their original deal. I thought it was wise for shareholders to vote it down. I think both potential deals had a lot of regulatory issues, but this one still has a long road to go before getting it past regulators. We have a very tough regulatory regime in Washington right now, and so this is going to take a long time to get done. So we'll see if they're able to do it. But I think shareholders made the right call. I think JetBlue has been magnificent throughout this in really making the more compelling case. And so I'm thrilled that we have gotten to today, and it's done very well compared to the space generally. But I'm cautious about how long it's going to take, and think there's real risk ahead in terms of getting the deal actually closed.
Yeah, well, you don't want to run into that regulation, right? We'll see what happens there. Let's get into I want to play a little fun game. We're going to call it Sign Me Up or Put Me Down. So will Twitter win the battle with Elon Musk's acquisition? So will you sign me up for that one or put it down?
Yes, I think that it is there's two different ways to look at this situation, and you're going to come to two very different conclusions. One is if you rely kind of on secondary sources, if you kind of listen to kind of Twitter memes, Elon kind of saying things, he's incredibly skilled at just kind of saying things that on a very casual, superficial level kind of sounds right, but is nonsense when it comes to the actual definitive merger agreement that he signed. Kind of sober and clean and free on his own recognizance, he signed a document and it says things. And not only does it say things, but it was written in a way that in the course of negotiations went from ironclad to whatever's stronger than ironclad. And he committed to this, and he has the resources to do what he said that he would do at that moment. He can be very changeable, and he might have in other moments previous and subsequent to making this decision wanted other things. And I think the other things that he wanted correlated very closely with markets, especially with Tesla stock, that he was going to have to sell a part of his stake in order to do this Twitter deal. But that's not how Delaware works. He's going in front of a judge who's a very serious person. And we've had a few early indications on her thinking here. First, when she scheduled the case, Twitter said, we'd like to do a quick trial. We'd like to do it shortly, and we'd like to focus on the contract that he signed. And Musk's lawyers said, well, we'd like to take a long time, and we'd like to do all sorts of things, and we'd like to kind of fish around and see if we can find something. And who knows, we don't really have much yet, but we might find something later. And she listened to both sides carefully, and she went not precisely with what Twitter wanted, but I'd call it 85%, 90% of what they wanted, and then gave a detailed, careful explanation that, in my mind, a scheduling hearing is normally just kind of picking a date. But in this case, both sides slipped a lot of substance into that series of filings. And now we have again, as they're prepping for trial, again, Elon Musk's lawyers say, we'd like all this stuff that goes completely outside of the definitive merger agreement, where information requests are for the purpose of closing the deal. And they want other stuff, and they want to see what they can find. She's going to rule on that shortly. And I think, again, that's going to be really interpretable in terms of what's happened. So I think it's what should happen, what probably will happen, is that this judge will rule in favor of specific performance, require him to do what he said he would do, and close the deal at $54.20 later this calendar year. And the alternative to that that's most likely is both sides see the same set of facts. Both sides are well represented, and you can kind of net present value that versus some possibility of Elon winning, of a draconian downside for Twitter. And so you can come up with different kind of net present value of the outcomes kind of adjusted for risk and time that would be in the kind of low 50s, maybe high 40s if there's something that heretofore hasn't come to public. So you could have a settlement probably in late September, early October, or go to trial in middle October. And boy, if things are even approximately what they look like today, it's extremely positive for Twitter.
The battle's on. We'll see who comes out as the winner, or maybe both win, right? We'll see what happens there. Now, next kind of question is towards energy. You know, do you feel that maybe oil will come right back up roaring to all-time highs?
I don't know, and I don't know that anybody knows. I would say that if you look at the energy curve on the commodity, and this is, I think, a lot about oil and gas, kind of together, because a lot of the equities I look at are exposed to both. I think that there's an enormous amount of geopolitical risk. There's an enormous amount of irrational from the perspective of not rational and self-seeking economically, but other things that come into an almost religious interest in green energy and alternative energy, and things that, if you stipulate that their goals are good, will take decades and decades to replicate hydrocarbons. So I think there's a lot of structural reasons why oil could go much, much higher here. But wherever it goes, and however the curve looks in the coming months, oil-related equities look extremely interesting and cheap compared to the commodity. So I have actually no kind of direct oil and gas commodity exposure, because there's some equities that are very exposed, that are leveraged to oil and gas, and that look like a much better deal. And so a different way to say it is their break even is on a much lower oil and gas price. If they can hang on to today's prices, they'll be, you'll get back in cash flow in the next few years their whole cost basis, and you'll be left owning an oil and gas company. I mean, there's some real bargains in oil and gas equities, and that's where a lot of our exposure is this year.
Yeah, I mean, I can't blame you for being in that area. We keep seeing Warren jumping on that oxy, and we're going to find out if he was able to, or probably might have been adding to his Chevron position, right? I mean, energy definitely is something to keep on watch. We'll keep watch. Now, I know your capital firm is a lot of event-driven value investors looking for discounts, an intrinsic value. Now, first, what would I have kind of more basic retail investors out here. What should you look for to find this? And is there any kind of plays or areas that we should be looking for?
Sure. I think that you mentioned what Buffett's been doing in energy. I think you can kind of read into his thoughts. And if you just look at the economics of a Chevron or an Oxy today, it makes all the sense in the world. He often complains about how he is much more constrained by his size than he was back in the Buffett partnership era, and that he could be making 50% a year if he only had a few $1 million to invest. And so we have a lot more flexibility in terms of kind of market cap. So the kind of things I'm most interested in involve, I believe in the energy thesis, so I'm happy to do something that's fairly leveraged to oil and gas, number one. Number two, I want some confidence that there's going to be a return of capital, that we're looking for dividends, special dividends, buybacks, M&A opportunities to sell assets or to sell whole companies. We're not looking for anybody to simply do something speculative with our money beyond what we think they're doing in their core business. So just examples would be something like Amplify Energy, ticker AMPY, which is disclosure, it's an investment of ours. We know and like management. They have terrific assets exposed to oil and gas. And there's kind of a number of things about AMPY that I think is compelling. I think this could be worth $15 or $20 a share easily. It's under $7 a share. So I can just tick off 4 things. One, if today's oil and gas price is even approximately right, this company's worth a multiple of what it costs today. And another way to say that is oil and gas could recede very far from here, not to $20 a barrel, but it could be, it could be significantly lower than where crude and nat gas is today, and Amplify is still fine. Number one. Number two, they had a pipeline disaster that originally appeared to be possibly huge and their fault, and it turned out to be neither huge nor their fault. Media trying to kind of dramatize the situation started estimates on how much was leaked per barrel, and then without any explanation, as soon as it started looking far more mundane, they simply switched to gallons just so they could still use big numbers. But one, it was smaller than expected, and then two, it was they were the victim. It was a ship dragged its anchor over them, and so I think that ultimately this is something where there's going to be recoveries from this from the people who are at fault. But in any event, they're going to be able to get the beta pipeline back on, and hopefully that will be within the next several months. When they do, the pace at which this company is going to be making money, they're going to be able to, in the next few quarters, they're going to be able to pay off their debt. They're going to be able to have their hedges roll off. So you're going to own free and clear just an extremely attractive, very leveraged to oil and gas company that is going to be, they're going to be able to pay off debt, roll off hedges, get their pipeline back on, and it just could be a really explosive opportunity, I think, especially if you measure it in the next few years.
Definitely appreciate you coming on and bringing that play for us. We'll definitely keep on watch, like always, guys. Do your own investment research and look into it. Look into how they come after this. Why are they looking at that name? What is really showing up? And he talked about it there. When you do your deep dive, you'll be able to find if the net asset value makes sense here for you. Definitely do that research, and you guys can be learning some skills just the way that this capital firm goes after these stocks. Appreciate you coming on today, Chris, and we'll definitely bring you back. Thank you. All right, there you guys have it. The second interview, we talked about some MMA talk. I think it's definitely to keep an important watch on that, and definitely looking to try to find some discount at intrinsic value could help out investors really try to build up a portfolio. So if you're looking at that, I would definitely look into it. Do some deeper dive. You have to understand the fundamentals. You have to do some calculations if you really want to go ahead and get advanced on this. We used to look at this all the time when we were in the SPAC environment, right? In the SPAC environment, this was one of the biggest things that was definitely on watch for me. So I'm going to continue to watch to see if we can find some other plays. I did see in the chat, Zoltan wanted to talk about Devon Energy. We'll reach out to Chris and see what he thinks about that. And then we'll just keep on working towards learning some more into fundamentals. Like always, it's not always just one side of finance. We like to talk about the technicals, the fundamentals, and the story, but definitely if you can do some deeper dive. And in this time, I think it's important to learn fundamentals so that by the time you get back into a bull market, you understand how to look at those valuations and see if they make sense for you. All right, let's go ahead. We're going to wrap on up here. If you guys got a stock to check on out, let me know before we get on out of here. We got about 2 minutes, and the SPY does not want to stop, guys. It's up there now to 406.33. We're just continuing to push here. I did see Amazon really pushing, Google pushing on up. We'll see how these continue to do. Apple coming into the earnings. Look at that, up there towards 157 now. If we could get a good earnings report from Apple, Amazon tonight, there's no reason why we can't see the SPY just push on up through there, get on up to maybe even the 408s tomorrow. Now, of course, this is something to keep on watch because last time we were breaking on out, of course, what did we get? We got a couple of days where it was pushing on up. It looked like it was going to break out, and then it just flipped on us. So this is what we want to see. It not look like this, right? And so you're seeing another strong day today, Just don't want to see it wick up here and then come right back to the 402s, because that's when we start getting to that sideways action that we saw here. We don't want to see that. We want to see it just continue to rip. And with another good earnings report to show up there towards the 416, then you're really going to have people starting to call the bottom, and we'll see what happens in the overall market. All right, I see some stocks mentioned there. Amazon, APLD. Let's take a look there. APLD, I don't know that one. Applied Blockchain. It's not doing much here. I honestly would just leave this alone, but it's up to you. I'm not going for any blockchain type of stocks right now. You could tell, like even Mara, right? Like if you were looking for Mara to come back all the way up there, maybe you play that. But for me, I'm not touching these kind of crypto plays, at least for a while. I think crypto's in a long, prolonged winter, so I'm staying away from it. Let's take a look. Crocs. The Crocs. Crocs has been really strong. We usually have Jay in the chat that's a big fan of Crocs. I'm not a big fan, but hey, to each his own, right? This is definitely having a strong day, pushing through the 60s, up there to 67, and looking like it wants to come back on the trend. I know their earnings weren't the worst. A lot of kind of comments being mentioned on Crocs have been pointing back towards the upside on this. I'm not the biggest component of Crocs, but yeah, it's trying to catch there the 200-day moving average on the weekly. That was around 60.44. So that's where we want to see the strength really coming from, around the 60s. And you can see how it pushed off the 60s today. So make sure that it now holds maybe some pullback to 64, 65, and then continues on its way up there towards 75 and 80s for the next resistance. We'll see what happens there in the Crocs. Get your Crocs before they run out. They're always sold out. We'll see what happens. All right, that's going to do it for me, guys. 201. That's going to do it on Stock Market Movers. I hope that you guys had a great show with me today. We went through tons of earnings. I think we touched 12 different stocks. We talked about GDP. We talked about the jobs initial coming on out. We took a look also at were we in a technical recession or not. So if you need to check it out, go ahead and rewind. We had a great show. Of course, two special guests joining us today. JoAnne Feeney, portfolio manager and partner at Advisor Capital Management. We got Chris DeMuth, hedge fund manager at Rangeley Capital. We're going to go ahead and continue going here on Stock Market Moving, keeping you guys in the informational edge. Definitely give me a thumbs on up. Hit the subscribe bell below and let me know, what should we be watching tomorrow? Crassy knows PCE, baby. Keep an eye out on PCE. We'll see what happens. I talked about this earlier in the day also. So keep that one on watch. It's something that everybody should watch tomorrow. Here are those estimates for you, Crassy. So month over month at 0.5 estimate, prior 0.3. Why is this important? Just look back at the conference yesterday from Jerome Powell. What did he mention? He got the specific question about CPI and PCE. He said, which one do you guys watch? What matters? Well, he said to the media, CPI matters, and yeah, that could affect the markets. But to us, at least when we look at the data and determining what are we doing, we're looking at PCE. Clearly stated by Jerome Powell yesterday. So keep it on watch. That hits the tape at 8:30 tomorrow. Smash the like before I get on out of here. And I'll see you guys next time right here on Stock Market Movers. Up next, you guys will have a little bit of a window until at the close. So if you want to go ahead and take a little bit of a breather, go ahead and do so. We'll be back at 3:30 with Joel Alconen, of course, on At the Close. And take a look at this rally. See if it's able to hold on.